Stock Tip. Best stock setups.
Welcome, I'm Maciej Todia and this is today's episode of Stock Tip Daily Update. I would like to begin the episode with some great news. As of yesterday night, our official website stock-tip.com is officially online, officially working, and I find this really exciting. As of today, you are able to find all your info for a technical analysis on our website, including a detailed market timing model, when is the right time to invest, when you should stay cash, what are the short-term views, what are the mid and long-term views. Also, you'll find there all the setups that are going to be presented in the third part of our video. Now you are only going to be able to find them on our internet website. You have to join for this and take a look for yourself. There are a lot of cool features, but I'm going to leave a link in the description and I hope you're going to check it out. Then to today's video. As always, in the first part, let's talk about the markets. So also yesterday I've mentioned there is the movement in the market should be interpreted as a bounce, as a technical bounce, and not as a rally. It remained to be seen if this was a rally or not, and yesterday wasn't that much convincing. After yesterday, I think we may lose some optimism regarding the rally. You see here the SPY, but also the Nasdaq. They've made a they've had a pretty weak day, and both of them seem to have turned in this area. Pretty much where the resistance of the moving averages is. The Nasdaq has finished the day a little slower, has finished underneath the moving averages. As of SPY, S&P 500 has managed to finish above, but they still look pretty much the same, and I'm going to take a careful look at the Nasdaq and say that today's trading will be decisive, perhaps decisive. If we fall and finish the day underneath yesterday's low, then I think we are up for a surprise. We are up for a continuation of this correction. If we finish the day above yesterday's high, then perhaps there is still chance for a continuation of this bounce or rally, or call it as you may. For now, all we can do is wait and see what happens. That's why I still think cash is a key position. Cash is the main position to be had. I'm personally perhaps 10 to 20% long. I don't think, definitely not more than 20%. So be careful. Don't try to do too much. You could be wasting your money. The other markets are pretty much mimicking what the main US indexes are doing. So the Russell has finished today a little worse than Alexa has started talking. The Russell has finished today a little worse than the other two, definitely underneath the moving averages. Then the German markets are doing actually pretty well in this market. They are nearing the the resistance of our long-lasting trend. I think we'll have a little turning point here, a little consolidation, if anything. So I won't expect a breakthrough, a breakout here. In the best case scenario, I think we'll have a consolidation, and eventually, if the other markets fail, then perhaps also here a breakdown. Sorry, I've got a little cough here. I think I've have it from my kids, but don't worry, I'm fine. Then euro to US dollar, the last 2 days have been good for the euro and bad for our portfolios, because investing in the US markets means primarily US dollar currency. We've pretty much broken through out of the trend line, so perhaps you should start hedging your position a little, start investing in the little euros, and diminish your US dollar position. The oil is still rocking the markets, is still moving upwards, and the next resistance should be at about 230, and then finally 245. We shall see just how far along it's moving. Gold is still moving sideways. Still pretty much hectic, up and down and up again, and the same can be said about silver. We still have a resistance line here, and by the looks of this abrupt movement here the last 5 days, I don't think we're going to be breaking out of this sideways position anytime soon. Then let's move along to the second part of our video. The trades we did yesterday or the last few days. Yes, in yesterday's video I didn't talk about our running positions here in the SPY. As you may remember, in the SPY and the Nasdaq, in the Qs, I've opened a position about here, and with a minimal risk. The risk was that big here, and after Tuesday's movement, I was able to pull the stop here, and yesterday we've started the day with a gap, up, and after this gap attack, I've pulled my stop here, and the position was finally closed about here. The same thing also happened in the Nasdaq. So in the Nasdaq, I've opened the position at 377.5, let's say, or no, I think 380. Let's say this was the number, with a stop here, and the same movement at the end of Tuesday's trading. I've pulled the stop at about 384, and then under the gap, and this was finally stopped here. All in all, you may see, I think this was a healthy move in both of them. I was able to make about 3 times my initial risk, and that's yes, about 3 times my initial risk. I think in the Nasdaq I was able to make about 4 times my initial risk, and that's something to be proud of. The first winnings were I think were here and or here. I think here were the first winnings, and then the position went further, and finally stopped here. The end of yesterday's trading hours, I inverted the position. I think I inverted the position here at about this point, so not quite at the end of the trading hours, with a stop above the above yesterday's high. The same in the SPYs. So I think I opened the position here, a short position with a stop above yesterday's high. As of this moment, I am plus minus null. So I don't know if the markets are going to turn, but I'm kind of counting on it that we're going to continue our correction here. If that's the case, I will be making a little more money. If that's not the case, then my risk is still pretty much minimal, and the last two trades in the SPY and the Nasdaq, they've pretty much kept me afloat, so that I haven't lost anything during the correction, although many of the positions were stopped. Yes, then the last open positions are IRTC, which also had a pretty good day yesterday. It continues its run. In the weekly chart, you see it's a good week for IRTC, and we are going to leave this position. Let it run. The profits have been taken, and the stops are here. So now we are going to sit back and enjoy. We don't have any risks more, and if the position runs like it should, then perhaps we may still reach our 300 mark, or just slightly below 300. And ENVA also continues its run with a new stop, I think here, but I think I should look in the daily chart. I think the stop is still here, but the profits have been taken, and we will see what happens next. So I didn't do anything more yesterday. It wasn't that much of a hot day for trading, not that much action, and in this market environment, I don't feel like doing too much. So in certain market conditions, less is more, and that's a golden rule. Now for the third part of our video,